All right. Hey, everybody. Dan Fitzpatrick here at stockmarketmentor.com. And I want to look at Rigetti. Now, if you've been following this stock, this doesn't look like the chart, does it? And the reason is because this is June 26th right here. So I'm going back a few months, and this is why. I want to show you. I want to show you the basically like the anatomy of a squeeze. In fact, I can even go further back on this. Now, the thing that's really cool is forget about this is a kind of not a random one, but this is the first one. It's a little bit different because this is the 200-day moving average. And typically you want to see the 50-day moving average over the 200, but the dynamics here are the same. So you've got these tight Bollinger Bands here. Stock pops up more than twice average volume. That's the first day. And then the second day, what you're going to want to see, just to make sure this isn't a fake out, you're going to want to see some continuation. And we got that. It may not look like much, but actually on a percentage basis, it's up over 4%, almost 5%. So this keeps going. Then, of course, it knifes through the 200. But the point that I want to make here is this is a really, really volatile stock since it got going here. Back, even all the way back, it's been kind of volatile, but at least it'd been trading sideways. But once this thing broke out here and then certainly broke above the 200-day moving average, this was on fire. Now, one thing you got to be mindful of is most funds, excuse me, most funds, it's against their charter to own something that's under $5. So you don't have Fidelity or Magellan buying this here. And so then the stock kind of does what it does, pretty volatile. And then what I want to show you here, and by the way, so you can see even here, in just a few days, that's 40%, over 40%. So let's go to the next squeeze. I'm not going to analyze all this. That's actually seems kind of easy to do. But now we're going to the next one here, which is, excuse me, it's May 2nd. I'm just looking down here. It's May 2nd of this year. And again, you've got pretty tight Bollinger Bands, a heck of a lot tighter than they were here. Sideways consolidation, flat 50-day moving average. This breaks out above on some pretty high volume here. And then you'll look and see how high this thing went. So this is at like a little, we'll call it $11. It's not too much longer before it's 12 and then 14, et cetera, et cetera. And then this just continues on. But you can see it's been trading in a range. Now, here's your next one. Tight squeeze, 50-day moving average. Bam, higher than average volume. Very, very strong close, like good closing location value right at the top of the intraday range. And that was a 15% move in a day. Now it's in institutional territory, of course, because we're at 13. And so you can see, by the way, 128 million, I mean, this is a lot of, this is where it's trading now. But even back then, it was like 22 million shares. That's a lot of shares. Then we get another bounce here, right? Okay, I'm not analyzing that because it's just a bounce. I'm looking at squeezes and opportunities, and there's a reason for that. So we're coming up to present day here, and I'll show you what we did here. A lot of stuff going on, but I saw what was happening here, and I've been following this stock for a while. I only, to be candid, like I only traded it once or twice. I didn't really trade it a lot. In hindsight, hey, I should have just bought it and held on, and that was the end of that. But what I was watching for here is if this stock was going to rebound off the 50-day moving average, and sure enough, it did. So this was the day that I put this on our active trade list, and it's a bounce. It's not a volatility squeeze. We see what's going on here, and this is a good kind of an early entry. You can call it a pilot position, a small little position. Mark Minervini calls this like a cheat entry because he's kind of getting an early head start on it. I don't think this would be exactly that because it would be different if this was like below the 50-day moving average and you say like, oh, I think it's going to go back up. Maybe I'll take a little stock here. You could do that. That'd be kind of where you're cheating. But here, I look at this as just a good entry, a good low risk entry, and you'll see where I put the stop just a little bit below here. So you're in at like 1460 and you got a stop of 395 and that is 4.44% risk. That's a pretty low risk for this trade. And then it does start paying us off. Fine. This is where it got really interesting right here. And a lot of these stocks were doing the same thing. QBTS was, well, this is another one that's, forget about this one. The bottom line is a lot of stocks in this sector, I'm not going to go through them now, we're really working hard to get up. But this, once again, is heavier than average volume, popping off of the 50-day moving average. These Bollinger Bands, not like super tight here, but they do reflect this sideways consolidation. So you're in here looking to hold the stock here. Now it starts to move up and bam, when it breaks out above this upper Bollinger Band, that's when you know you've got a real significant pop. And so that's when you can add to your position. We added it at some point here, I forget which day, but the idea was I'm going to put my stop here at 1890. The low here was 1892. So what you do on something like this, if you're even buying intraday, you would say, all right, if the stock falls below today's low price, I don't want to be in. It's going the wrong way. I need it to go higher. Alternatively, on the next day, you can be doing the same thing. You can use this same prior day's low as a reference point for making this trade. So the bottom line is this, though. This tactic of waiting for these tight Bollinger Bands and buying on the first pop, that really works well. It'll work really well for you. On this one, we got a heck of a move. We've actually got almost a double here on this. So, and this is the power of volatility squeezes, and we have a bunch of them. So if you are not a member of Stock Market Mentor, why don't you join me? We're crushing it these days. We should be because the market's real strong, but our stuff is outperforming the market. I got a handful of stocks just like this that are up. Like this is the best performer, but they're up 30, 40, 50, 60%. One of my members the other day, I don't have the email right in front of me, but he told me he'd tripled his net worth since joining Stock Market Mentor. And he also told me I should raise the prices, which, by the way, just between us girls, I'm going to be doing really soon. So if you want to get in at 147, you could do that now. Otherwise, probably going to be $200 before too long. And I'm not going to do it with fanfare. I'm just going to raise it. So I'm just letting you know. Love to have you as a member, and I'll see you next time.